Welcome back to 0.5%. This is episode 10, weekend research, and we'll be going over stocks and crypto in this episode. I'm going to start off on barchart.com. I want to look into sector ETFs. I think I'm going to start moving those ETFs that I have around on top of the day trading, just sector by sector. And then I want to ask some AI questions, whether it's ChatGPT or XAI. And then if we get into crypto, hopefully towards the end, I got some questions asked there. But it should be pretty informative episode, so I hope you enjoy. And let's get into it.
All right, welcome back to 0.5%. We're going to be going over some research with the stock market and the crypto market using ChatGPT and XAI. I'm kind of curious to see what kind of help I can get from AI and then comparatively between ChatGPT and XAI. From my understanding, Elon Musk helped start OpenAI, broke away from it, and it became not necessarily open source. This is me poorly summarizing what I think I heard Elon say himself. But because OpenAI became non-open source, he opened up XAI to do what ChatGPT originally set out for. So I'll do a little bit of comparison between the two, asking the same questions. But I kind of have a route, so we're gonna wing it, starting from barchart.com, similar to how I've done my research in the past, and then hopefully just complement it, get some suggestions with AI. So first things first. Starting on barchart.com, I want to get rid of everything that does not typically outperform the market. So the lowest tier is this light brown. I believe that's in energy. And then light purple, materials. Dark red, healthcare. Next, it looks like either light blue, gray, or purple, but yellow has stayed under the whole time. Let's get rid of yellow. So light blue's gone below and above. Through here, it's under. So since November, it's been above. But the chart starts in April. So April to November, and then November to April. More time, it's been under the market than above. So I'm going to get rid of light blue. And then next, I think, is consumer services, which is what I've been trading recently. And the discussion behind that was this almost 30% drop. But historically, I've gone back and looked at this. So we'll look at last year. It's pretty much riding the market, under the market, riding the market. And then in December, it broke above quite a bit. This is the green line I'm referring to. And it's come back down. So even though the sector itself is down about 30%, or let's see, what is it sitting at? 10.48 in 31. So let's just say 10.5 to 31. That's like 20.5% drop. That's not typically where it sits. So although I think there's the potential for a 30-ish% recovery, I don't expect it to be as volatile getting back to it as maybe tech. But all right, let's take another one off. So the closest one to the market that's always either riding it or under is this light purple and light gray. Light purple is consumer staples. Let's get rid of that. Light gray, you'll see light gray is under, matching the market, above the market, above, matching, and under. So not too much above. I think, what is gray? Gray is real estate. So yeah, let's go ahead and drop that. All right, so these ones have pretty much been above the market the whole time. You'll see we've got a little bit of purple here under the market, and that's financials. Financials were not doing as well as the market here. And when I say the market, I'm referring to the S&P 500. I think that's what Standard and Poor, the top 500 companies of the U.S. market. It's riding, it jumped up. It's riding, it jumped up. So I wouldn't be surprised if financials comes back to riding and then just stays there. And as it sits now, so I think it's easier to see if I move this over. So since, let's just start at the new year. So since, here we go. I think this is December 31st. All right, so we pretty much got it at the new year. So tech, which typically way outperforms the market, is sitting, what is this? Basically 12.9, and the market is sitting at -5. So tech is 7% below, if I'm understanding this right, the market. And normally, as if I back it up so you can see the whole year, well, like tech is typically always outperforming. The black line is S&P, the red is tech, huge gap here. But even in the lows, the low of tech, this red line, is above the low of the market. Technology is where we're invested in right now. I think more than a year, it has been outperforming the market. And you can see here, even on the grand scale, if we come down to the very end, you can see tech is here, 7.64, and the market is here, 8.5. So tech has a huge run up to go. And if we look at tech's high, which was 26.5%, and then where it's at now, 7.8. So the whole sector is probably due a 19% recovery. Maybe on average. I don't know if that's the high or if that's the average or if that's the low. But as the stock market works, it keeps going up. We should expect it to at least retest its highs, the sector highs. So I think moving forward, I'm going to be more focused on tech stocks. And I think this is a perfect time to start jumping into AI questions. So I'm going to start on ChatGPT, but before I jump into it, what do I have on here? I have utilities, financials, ComServe, and tech. Like I said, ComServe, ride in the market, below the market, ride in the market, above the market, and still above. So I kind of want to suspect that communication services might just come back to the market and then chill with it. I want to do better than that. So I'm going to take off ComServe for now. Let's see what we got. So purple now, riding the market, under the market, under the market, under the market, under the market, above the market, way above the market, riding the market, above. So financials is okay. It's not the best, and it did have an under period for much longer than any of the others. Let's take off what is it? Financials? Yep. So now we've got utilities and utilities and tech. I think I said during the last research I was most interested in tech and communication services, but I think Conserve fit on there because this massive drop that it's been in, like look at this, it was up 31% and now it's only up 11.8. Like, so I don't know if it's going to touch those highs again, but as far as how it performs in comparison to the market, it typically is with it, sometimes way above it, like over here in February, sometimes way below it, like here back in September of 2024. So now that I've looked at it again, I'm kind of okay with taking it off. These two, tech and utilities, are either right in the market or above it. Like, let's see, the only time tech's been below the market was here, and look what happened after. Huge run up, the biggest run up it's ever separated from the market. And then past that, always been above it. So right now it's below. Maybe it'll keep dipping again. We'll see back here in April of 2024. It did have a couple dips while it stayed below, but once it crossed over, tech was on a run. All from, let's see what this was, from May 3rd to July 10th, basically 2 months, 3 months, basically all of May, all of June, and then what did I say? July 10th, so about a third of the way into July. So like a 2 1/3 of a month, tech ripped after dipping below the market. Let's see what blue is. Blue is utilities. When tech got hurt, utilities lagged. It recovered quickly. Let's see where. So other times when the market dips, tech or utilities kind of remain steady. I'm not sure what is all involved with utilities. I mean, I'd assume it's like electricity and heating and water and stuff like that. Not 100% sure, but every time the market has dipped, utilities have been slamming. Let's see, when utilities dipped, so did the market, but tech went up. And when was this? In December to January? So back into the new year, I'm trying to think what happened. Trump was coming into office. He's talking about teaming up with Elon and all of these billionaires. Tech's probably super stoked on that. Why would utilities go down though? I might have to do some research on what Trump has been, or what the whole, what do you call it, administrative team or whatever has been planning. But I'm not sure why it would have dipped at the end of the year. This is just some stupid, random thought, but I know my heating bill, which is a utility, goes up in the winter. So you would maybe think I don't know. This is stupid, but I would think during the summer there would be a dip. Yeah, I guess there is. Utilities coming up to the summer, midsummer, middle of July, dip, and then all the way to pretty much Christmas. It's getting colder. Maybe you're using more electricity and whatnot. I don't know how it works. I'm just making shit up here, spitballing. But that looks good. And then, yeah, utilities is still way above. Like, so we had a touch of utilities in the market here, a touch of the utilities in the market here. I suspect tech and the whole market in general are going to shoot way up. And then utilities might remain neutral because it should stay above, but it's got to touch occasionally. It touches actually less frequent than tech does. So, man, utilities might be the best. Tech always outperforms. Like, let's see. I don't know. They both look good, but We're coming up to 14 minutes now. Even though I want to keep this continuous, I'm going to talk right now like I'm about to cut it. So I think going into the next 15 minutes, I'm going to start asking questions on ChatGPT and XAI, comparing their answers. And what I want to get out of this is I have my ETFs that are my basically core, like 20,000 plus, keeping me a registered day trader. I want to move these around, not as day trading, but swing trades perhaps. Basically, just rotating the 20K from sector to sector based on which one is down, but preferably sectors that more often than not are outperforming the market. So as of here, the two sectors that I should be looking to move my ETFs around in are tech and utilities. ComServe might be one. It's outperforming, but pretty much it's outperforming, but it's basically riding, and then under, riding, and above. So I feel like ComServe might be one that I more frequently go in and out of. You can see, actually, let me take this off. So let's see if does tech immediately follow the market? So let's look at this high. There's the high. So tech started coming down and the whole market had a couple more up runs. But when the market started coming down, tech started coming down, and then recovery. So I think tech is actually, in this case, an indicator for when the whole market might be going down. It seems to be a little bit ahead, but I don't know how that compares to financials. If we put in ComServe, and then we'll wrap up this part. Man, big slam. So utilities is actually on the up. ComServe's on the slam. Utilities are tech on the slam. The market on the slam. We should have a great opening week Monday. But that's it for this part. I'm going to keep recording, but we're going to break it here.